Praise be Jesus. Thank you so much for joining us, America. Wonderful to be with you. Last we were together, it was May, that fabulous month dedicated to the Theotokos. Here we are in June. Longest days, most sunlight, start of summer. And this will be the last time we'll be together before the 250th anniversary of this nation that we love. It is a blessing to be with you. We have several new marketing partnerships who are bringing people to us for the first time. Welcome. So to many of you who are new to gold, with this edition of God and Gold, we're aspiring to bridge the gap of being able to be explanative of what gold is, why you want some, as well as very current for our ongoing members. So as our marketing team articulated it, this is Gold 101 with a very current twist, touching on SpaceX and the latest news. So let's dive into it. First, just to give you a little bit of background about us, who we are. St. Joseph Partners. We named the firm to try and honor the Lord. We have one focus, that is physical gold and silver as a unique tool of diversification in portfolios, a unique way of helping investors and families protect themselves against risk. And we're saying unique, not because it's our opinion. And again, all we have is opinion. We can't guarantee anything. Gold carries no promises. But what gold does have is this data set. We always want to share with our clients finance, the study of money, is a deep dive into the data of money. What else are you going to find in finance that has a history going back literally millennia, that has spanned every continent and has yet to fail? That's a good probability that moving forward for the rest of our lives and the lives of our children, it's going to continue to have value. We are a firm that wants to lead with our faith. And that may sound ridiculous to some who are not there. But in our opinion, and what we'll delve into in our report that we're highlighting, we've just released on June the 12th, the same day as the SpaceX IPO, is that makes, in our opinion, all the difference in the world in helping investors have wisdom, choose wisely in what they're doing. Scripture has proven to be the third leg in the investment stool for owning gold. And whenever we say gold, we're just shortening gold and silver. Everything we say for gold really applies to silver. Both of them have spectacular tailwinds. The first leg of the investment stool, we would say, are the laws of finance. Laws of finance say when countries take on too much debt, you will see the value of that country's currency begin to collapse, and the corresponding value of gold in that currency begin to appreciate. We haven't found one case study in history that doesn't support that law of finance, that foundational part of our investment thesis. The second is the financial history behind the law of finance, which also is unbroken. And the third we would point to that is unique among assets is the scriptural guidance highlighting the importance of gold. We generally point to three of the many verses in Scripture that speak of this. The first is calling to mind people's attention. Why did God tell Adam where the gold was before he kicked him out of the Garden of Eden? It seems irrational. There were so many things he could have spoken about. There wasn't any commerce going on in Eden, was there? But he did. And then he became more clear in Haggai, in the Jewish scriptures. God made an incredible statement. Think about it. God identified himself with the metals, and he said, silver is mine, gold is mine. You don't see him saying that about any other asset. So there's something about these metals that brings with it an alignment with God. we, having thought about this a whole lot, would say God himself, rock steady, stable, not volatile. Those really describe the metals through the years. Yes, there's volatility in the near term, especially with all the shenanigans that go on in the paper gold markets. But if you go back 100 years, 250 years, you see gold's ability to buy the same goods and services has been remarkably steady. We highlight in our recently released report that the Constitution in the late 1700s defined gold and silver relative to the dollar. And up until that was changed, up until the Fed came along, you see that the same dollar bought the same, and in some cases, even more goods and services than it had a century earlier. And that is what the founders expected to happen and why they went to so much trouble to link gold and silver as the only legal money in this country. We additionally want to look at how the most knowledgeable players in the world, most knowledgeable investors are positioning themselves. The last several calls, we've had a number of comments from viewers saying, well, we spent a lot of time describing why gold, the investment thesis, but what do we do? So we have a handful of core services. The first we talk about here is the IRA service that we offer. An independent custodian reviewed dozens of physical gold IRA programs by dealers, and they concluded that we were their top-ranked physical gold IRA platform in the United States. We didn't pay one penny for that. What that means is if investors who have spent so much of their life saving for their retirement and have money in the stock market in their IRA accounts or the bond market, they may not know that they can take a portion of those assets in their IRAs and move them to a physical gold and physical silver IRA without any taxable consequence. And the fees to do so for many of our clients with portfolios of a few $100,000 are literally less than 10 basis points. That's 50% below the operating cost of an ETF. So that is part of the reason we are so proud of this product. Those may be the innards, workings of it, but the key is our people. We get tremendous feedback on our team. They are the ones who make the experience so positive. People often feel angst about going through this. Am I going to make a mistake? I don't know how to do this. It seems overwhelming. We step investors through each part of the process. We help them along the way to make it an enjoyable experience, knowing that at the other side of this, when their account is open, they will have a portion of their wealth. And what history has said is in the asset class that we want to be in with America's debts today. Recently, we have also broken new ground. We believe we are the first in the industry, and we have filed a patent around this process so that investors who have 401k plans, even if they are still active employees with the company, even if they want to continue contributing to their 401k plan, can now allocate to physical gold and physical silver without quitting their job or their 401k plan. They can continue contributing and they can take a portion of that into physical gold. So for employees at companies, especially employees, if you have worked for years and years at a firm, we know you have a very significant part of your net wealth in your 401k plan. With the markets at the valuations that they are today, that should be concerning. The ability to take a portion of your 401k, put it into physical gold is very positive, and we're really proud of this innovation and what went into filing this patent. We also offer straight buying and selling of the metals outside of tax-preferred accounts. If you want to buy gold and take delivery at a vault or wherever you would like to keep it, we facilitate that. And we buy gold back from clients all the time. Doesn't matter where you bought it, what kind you bought, or how you paid for it. And on our website, you'll see we have our proprietary bullion identifier, because many investors don't know exactly what they have. Is it a gold lira? Is it a half-ounce gold Krugerrand? Is it a $20 gold Liberty? So with our technology, you can take a picture of the gold that you have on your phone, and we will immediately come back and give you a bid for what your gold's worth, tell you what it's worth. And if it's not clear enough from the picture, our team will call you and tell you, this is what we'll pay you for your metal. We also do storage, where the one place we would suggest to investors not to hold their precious metals is in safety deposit boxes or safe deposit boxes at banks. If you have valuables in a safety deposit box at a bank, the bank will tell you your valuables are not insured, they are not audited. When clients store with our storage services, your metals are audited, insured, and secured to a degree a local bank can only aspire to get to. Beyond our services, we wanted to just give you a couple of moments of thought on what is gold, precious metals 101. So what you see here is a picture of gold before it goes into a mint. The little flakes that are so soft, very dense, significantly engineered in heaven to be resistant to rusting. And they have carried a value for millennia because they are so rare. There is a limited supply. Barrick Gold, the world's largest gold miner, said a few years ago, we are looking at seeing the total gold supply coming into the market decreasing by 1/3 this year, despite all the this decade. So to be clear, they said we are looking at the total mineable supply coming into the market being 1/3 lower at the end of this decade, despite the rise in the price of gold, despite all the technology, underscoring how rare it is. Goldman Sachs said that we are well past peak gold, meaning we're going to continue to see ore grades decline, which means you have to move more and more rock, tons of rock, just to get 1 ounce of gold. So that rarity creates value. But what is most significant that we would say every investor needs to understand is gold is money. What is gold? It is money. It is a currency. But unlike the currencies issued by governments called fiat currencies, where they print paper, a bill that you can take into a store, or print electronic paper, that paper is backed by nothing that has successfully preserved value over time. Gold has been recognized as money for millennia, and it has never defaulted. And if a government says gold is no longer accepted, the world doesn't care. It has simply worked. And in our report, we show you the history of gold and how it is literally intertwined. It is intrinsic to the word money in Chinese. It is inseparable from the word money in Japanese. And what this money does is it gives wealth preservation. If a currency collapses due to too much debt, something that should be of concern today, gold historically has protected the purchasing power of families. Gold, secondly, diversifies a portfolio in a way that financial assets struggle to replicate. In our new report, there's a section called Professionals Play Pretend, where financial advisors have led Americans to believe if you have a portfolio of 25 stocks, or if you have a portfolio of 25 stocks and bonds, you're diversified. You are not. We show you in our new report the academic research that specifies even sophisticated pensions today, endowments that have added private credit, private equity into their portfolios. They essentially have 90% of the risk of the stock market. Why? because financial assets have similar risk profiles. What thrives when financial assets are stressed? Historically, gold. An incredible value gold brings to the table. Gold has been crisis protection when currencies are crushed, when markets have been crushed. Gold has historically provided stability. So those are the basic reasons why you want to understand you hold gold. Peter Lynch, the great investment manager from Fidelity, said, if you can't explain an investment thesis to a 10-year-old child, you probably don't understand it yourself. That's it for gold. It's money that no government can destroy, that you can take with you, portable. $100,000 would fit in your pocket. Wherever you end up, you'll have wealth that the world values. People say to us, well, what would my return have been? How has gold done if I had invested in it previously? So with this slide, our team put together looking at what a 10 to 15% gold allocation would look like today if you had done this and invested in gold 10 years ago, as many of our clients have. And what you see is a $10,000 investment has grown to almost $35,000. A $15,000 investment has grown to $50,000. Gold has compounded since it began trading freely at over 8% a year. Now recognize, the point of gold is not to find the best performing asset. Gold, its role is again to protect you. It's to bring a conservative element to your portfolio. But despite that, gold has performed, generating returns that almost replicate equities, and in many of the more recent periods, actually do. So people will say to us next, when you look at those numbers, is it too late? We delve into this in our report as well. And we highlight how if you track other currencies and how gold performed in those currencies, we believe we are still in just the second inning, to use a baseball analogy, of where we think the price of gold will go. In our report, we detail many reasons why we think that is a legitimate view. Now let's transition to much more current news, because again, the news flow has been intense since we were last together. First, to underscore the complete dichotomy that we see going on, the ECB, the European Central Bank, recently confirmed that gold is now the #1 holding by central banks. More banks than ever are saying they're going to continue buying gold. And what we also saw was this year, China has bought a record amount of silver, as well as being a purchaser of gold unbroken for years. It was so interesting to see that in January, when at the end of the month and options were expiring, as we've detailed before, and some really questionable activity went on, when the price of silver, a metal that is in deficit, meaning more has been consumed than has been supplied for over 5 years, lost 30% of its value in one day. Many people panicked in the US. What did China do? Coincidentally, they leaned into that as if they had almost been expecting it. And they bought a record amount of silver into that weakness in February. And then in March, they leaned into it further. And they again bought a new record amount of silver. The central banks are aggressive buyers of the metals. We highlight this because they are the most informed players on the planet. They have political information that we do not have as individual investors. And they control the currencies. If the people and the institutions who control our paper currencies that drive the value we will see in bonds, impact equities, and are critical to real estate, if those entities that control our currencies are aggressive buyers of gold, we have to ask ourselves, why have financial advisors in the United States guided American families to 0% allocations. In our report, what we hope to do is to lay out all these facts for you so that you can make an informed decision, thinking critically. Do you want to be aligned with the commission salespeople pushing products that Wall Street needs to sell to support their $10 trillion infrastructure? Or do you want to be allocating to the asset class that history says has worked, has thrived, rather than being clubbed to death in debt crises? We think this is significant news that the ECB is highlighting. Secondly, this week we have seen, and I say that meaning in the last 7 days, near record negative sentiment towards gold among American investors. What does that mean? American investors have shown that they are more negative on gold now than almost at any time in history. The value that that brings to the table is American investors, non-professional, retail, families who are doing what their advisors tell them, are scared to own gold. We saw this in numerous metrics. The Holbert Digest hit almost 0% on a scale of 0 to 100 of gold bulls. The daily sentiment indicator went into the low teens. We saw the volume on the COMEX of participants in gold and silver hit multi-year lows. And here what we're showing on this chart is a metric going back 10 years. And this metric is called the put to call ratio, which means the put is in the numerator, the call is in the denominator. The put, or the numerator, is how many investors are negative on gold. They think it's going to trade lower. The call ratio is how many are bullish on gold. The higher the number, the more bearish America. So what you see here is that currently the put to call ratio, looking at 6 months, is at 10-year highs. When we were at these levels before, again, it was a contrarian signal, indicated that we were close to the bottom in the interim for the gold price, and a gold rally ensued. We can't guarantee you that's what will happen, but again, investors should understand investing is about probabilities. And what this is showing us is that gold has continued its upward trend. And when there have been opportunities like this, pullbacks along the way, those have been the moments for investors and families to allocate, to get to full positions. That's what we think these indicators are showing us. One more chart here for you. This is showing the cost to borrow, meaning to short gold. Rather than taking a negative view through a derivative market, this is saying I'm just going to short the equivalent of a gold equity, the ETF. And what we're seeing is that we are back towards record highs in terms of how expensive it is to borrow. The more negative American retail is, the more expensive it is to borrow. So what we tried to show you with these highlights here is a cross-section, multiple data points confirming from a sentiment perspective, gold is very attractive. When we get to these sentiment extremes, it doesn't guarantee that gold's going to begin moving higher. There are no guarantees. But as a risk manager, what you can say is we are at levels where historically it has proven to be a good entry point to initiate, add to a gold position, or complete your gold position. And gold meaning gold and or silver. Wanted to talk for a minute about the Iran conflict. We are hopeful, all of us as Americans, that this could be an extraordinary moment in history. We talked about this a month ago, and we said, we are all rooting that what Trump is envisioning, peace in the Middle East, a new era of cooperation with reasonable people, the freeing of so many who are oppressed there. We are hoping that that plays out. But what we are trying to help investors realize all time and in our report is you need to think like a risk manager, meaning you can't say, I'm hopeful that everything works out just like we're envisioning in Iran. There are reasons for concern. Israel is not happy about this. Many participants are not happy. What if oil prices don't tumble dramatically lower here with new supply? What if something goes wrong? You want to be positioned so that your whole family's future isn't built on hope. That's what a seasoned risk manager does. He says, there are probabilities, and I'm going to go with those, but there are also possibilities that things don't go as planned. So when we step investors through the math, as again, we do in this new report we're delighted to share with you, we show you that the optimal levels for having gold and silver, if you go back a century, have been 15% of one's portfolio. If you go back 50 some years since gold began trading freely, it's a 20% allocation. This century it's been 25. And in the most inflationary years, the top quintile of America's inflationary periods, the best allocation to gold has been 100% in a portfolio. We're not saying go 100% gold, but what this should be saying to someone who thinks critically is, do I want all of my portfolio built on hope, built on stocks and bonds, built on assets that are correlated, built on derivatives from Wall Street? Or do I want some of my portfolio in an asset class that has simply worked over time? And we would submit to you that is all you need to understand. You want an appropriate part of your portfolio, not only that shows, although we're hoping for everything to work out perfectly in Iran, we're not betting the farm on that. The last point we want to highlight as major news that's come up recently is record bond issuance to fund the AI build-out. And we'll talk a little bit later here about SpaceX and the IPO. Record bond issuance means Wall Street is selling bonds because investors are buying them. Advisory firms are supposed to go to their clients and recommend investments that are appropriately aligned with their goals and objectives. Well, we underscore this is the failure of the U.S. advisory system. And there's no gray area about it. We go through example after example, and we will gladly debate this with any advisor. And what we're seeing now is companies issuing so much debt, it is dwarfing what we saw at the peak of the dot-com bubble. The dot-com bubble really came down. Didn't mean the internet wasn't a good idea. It meant when there was a supply of so much paper that Wall Street had created, that the market couldn't absorb it. Now today, with QE, we can absorb a whole lot more. The supply of paper coming into the market, where companies are borrowing so much to build out these data centers, is a red flag. And we would submit to you, again, as a contrarian indicator, suggesting you want to be in something that is the antithesis to that. Again, we're going to talk about SpaceX in a moment. So let's just tell you a little bit more about this report that we have written. It took a tremendous amount of time and effort, and my thanks to our whole team for all the work that they put in to doing this and to making each part of our business a success as it has been. So first of all, the name of our report is Praised Be Jesus. We were originally working with the title Barbarous at the Gate. And that was a play on the old film highlighting Wall Street's greed and the threat it posed to corporate America, when private equity began coming after American businesses. James Garner starred in that movie, Barbarians at the Gate. It was a Wall Street clique you may want to go back and see. It portrayed the beginning of the cycle when Wall Street began coming after American businesses. And what they did was they would take businesses that were profitable, that were in a competitive position. They had strong competitive ingredients. And then Wall Street began layering these businesses with debt to pay Wall Street itself massive fees. We've talked about this before with the private credit, private equity studies that we have shown you. And what we would submit to you now is we're coming full circle, and we have barbarous, the barbarous relic, as Wall Street liked to deride gold, that is now at Wall Street's gates. And Wall Street can't deny it any longer. The lies that they have been telling, the stories that they have been spinning, are becoming more and more difficult to do, given our debts and what is transpiring. We believe that what we are seeing is the failure of the U.S. advisory industry. But this is creating an incredible opportunity for Americans. Why? Because if advisory had done what it was supposed to do, if it had allocated an appropriate portion of investors' portfolios, especially investors who are in their 40s and older, who invariably have as a key goal wealth preservation. If advisory firms had appropriately put their clients into physical gold and physical silver, told them to hold it outside of the financial system because it's in your interest, client, to do that. It's in your interest to have counterparty diversification at a time when our nation is laden with debt, the major currencies of the world are all laden with debt, and when the financial system itself is laden with literally quadrillions of dollars in derivatives. No advisor can look a client in the eye, tell them it's in your interests to keep your wealth with our firm and not to have your wealth in your own possession outside of the financial system, because history is clear. That is what is in your best interests. So in our report, we recognize we're trying to do something here with this report that has not happened in modern history. Today, 99% of American assets are in financial assets, not in gold, and accounts run by advisories, overseen by financial managers. They have told America, you don't want physical gold. So what we are trying to do here with this report is to delve into and show you so much history, all the different cases, that you will then be armed with the knowledge that our greatest investors of our era have, who have concluded they want physical gold. This is a big task to say, how can we help unlock the minds of Americans, open their eyes to the reality that this is what you want when they are getting pushed away from gold by a financial system. We underscore the advisory business has invested $10 trillion. That's trillion with a T, not government, the advisory industry. $10 trillion to build out their financial system. The purpose is to keep your assets on their platform. That's why they've done it. So this is what we are battling. And so it dawned on us, not only is this a big task, it may be insurmountable to hope that for the first time in the modern era, we can really help families understand why they need gold. And so we decided to title the report, Praised be Jesus. Because as we have shared with you in the past, heaven is clear. When we proclaim the gospel, When we say those three words, praise be Jesus, we are proclaiming the gospel. Heaven's explicit. The truth miraculously wins. The truth miraculously wins. And that is what we need. We need the truth to burn through the misunderstandings of investors today. And on the one hand, people would say to us, oh, you don't want to be so out in front with this idea of praise be Jesus. And what we would submit to you is no, it's the opposite. Evil has gone to such great lengths to convince you to live your life by Satan's first commandment. Satan's first commandment that he uses to run the world: you will not worship the Lord. You will worship Satan and false gods only, and you will keep God out of society. Why? Because when you keep God out of society, you make decisions like Eve. Eve. We were meant to be immortal. We were not meant to die. Eve was in paradise. Childbirth was painless. There was no disease. Satan strolls into the Garden of Eden. He does not, of course, admit. He reveals his methodology. He doesn't admit who he is. He doesn't say, hey, Eve, I'm here. I'm here to give you misery. I am here to make childbirth what it is today in the modern world. You're going to have to leave paradise. You're going to have your nose to the toil, to the grindstone just to survive. You're going to have disease that's going to wreck your family. You're going to have murder, all kinds of crime. Why? If Satan had told Eve his plan, Eve probably would have said, 1 minute, Satan, I'm just going to talk this over with God, who's been so good to me, who's given us paradise. I want to ask his opinion. Because if Eve had discussed this with God, she would not have made the stupidest decision that's ever been made by humanity. And so what we see in the modern day is the echo of that plan. Keep God out of your finances. You don't want his wisdom. Keep him out of your healthcare. You don't want his wisdom. He's only created you, engineered you, given you all the natural tools you need for health. And so realize evil stands to lose so much if we bring God into life again in America. We would submit this issue, praise be Jesus, bringing the gospel into America is the only way we're going to rescue America. Without Jesus, we don't have a chance. With Jesus, we're in great shape. It is our expectation that we are going to make history with this report because we have honored him, and that we're going to see record numbers of Americans waking up and saying, my advisor's a great guy, but I got to look out for my family. We tell people, keep 80% of your wealth with your advisor. Go ahead, let him buy SpaceX and everything else that he tells you is great. All the NVIDIA you want, all the junk bonds you want, buy it all. But make sure you have your hedge just in case your advisor isn't aware of some things that the central banks are. Keep your 80% in those assets, but make sure you have 20% ready to protect your family if indeed there is stress. We talk about this conflict of interest that advisors have. 1 in 33 million chance, people. We think you're going to like this report so much. A 1 in 33 million chance that what the Bureau of Labor Statistics has articulated as truth to the American public is true. With the revisions they have made to the inflationary measurements, 1 in 33 million chance that they're telling the truth. And by the way, why did they focus this continual revision scheme upon the inflationary statistics? Because inflation is the most critical economic input to understand the valuing of gold, silver, stocks, bonds, and real estate. So when they distorted the inflation statistics, they have made you think stocks are more attractive, bonds are more attractive. It's not a coincidence that they've done this. We talk about in our book Sun Tzu, who many of you may know about, an ancient Asian warrior. Older than Sun Tzu is the use and the strategy to destroy society the way the Nazis tried to destroy Europe. Highlighted, as many of you may have seen in Peaky Blinders, the recent series, the Nazi plan to destroy Europe has elements of exactly what the United States Federal Reserve is doing to America today. It's unambiguous. There is no denying that. Now, we're not going to say the Fed is linked to the Nazis, but the strategy the Nazis employed to destroy Europe is exactly what the Fed is doing today. Print money, debase the savings of the working class, destroy the wealth of the working class. Gold has been the antidote to this plan for centuries. Praise be Jesus, that the Holy Spirit will help us to understand gold is in all likelihood the antidote to what is going on in our financial markets with our government's debts, with money printing again today. And then to wrap up, and we're happy to open it up for questions as well, we want to talk about the SpaceX IPO. So again, we officially went to Cyber Press on June 12th. It wasn't our original plan. The biggest highlight, if you look back at the press on June 12th, was the SpaceX IPO. The biggest IPO in history. The culmination of months of speculation. Where would it price? Everyone was talking about it. But I think Musk made a mistake IPOing that day on the feast of Jesus. Because I don't think SpaceX is aligned with America or investors' best interests. And I think that revelation is going to come to pass. And we're hopeful. There's a little asterisk in history. What this report underscores and opens people's eyes to was also significant. We have been blessed to work in many great environments. There are many wonderful financial advisors in this country. We detail in this report how many of these good people are forced by their employers, by the advisory firms, to push products, investments that are in the firm's best interests. And many of these well-intentioned and even very smart financial advisors comply with what their advisors force them to do. Because the advisors, again, like Satan, they never come and tell you this is what's going to happen. They tell you the good side. They tell you what you want to believe. At one point, we worked at the epicenter of the dot-com era. And in the summer of 2000, the most storied IPO of the internet era came public. This company called Corvus represented what was perceived to be the future of what every company was going to need participating in the internet: optical networking. When the stock priced, it was a record day. It represented the first time in American history, first time in history, anywhere, that a company had raised $1 billion from investors without $1 in revenue. Pure idea. The IPO came out, a little bit similar to what happened to SpaceX when it IPO'd. It traded higher, and it continued to trade higher. And at its peak, Corvus looked like a spectacular investment. Who owned Corvus? The most famous investment firms in America. Fast forward a year, Corvus had lost 99% of its value, and most of you have never even heard of it. The death knell in the internet era was too much supply at prices finance didn't justify. So I'd like to think about SpaceX with you for a moment here and what's going on. Are you aware that for decades, there have been rules in place that would govern IPOs coming into the market. The NASDAQ, the exchange on which SpaceX trades currently, has had rules in place for years. And it said you have to float double-digit percentage of your stock, meaning you have to sell at least 10% of your stock if you're doing an IPO, or we're not even going to allow you to be listed. Why? Because if you sold less than 10%, it becomes really easy for insiders to start pushing the price around. Not an accusation, but this is what underpinned the rules that have been put in place. Guess what happened? NASDAQ decided to waive those rules so that SpaceX would list with them. Wonder why they needed to do that. Ask yourself, why couldn't SpaceX have just sold a little more? Well, does that mean their valuation would have to be lower? So what you're really saying, if that's the case, is that the valuation wasn't appropriate. What was the valuation? If you're not aware, America, SpaceX at the end of its first day of trading was trading at a multiple of 100 times revenues. That meant if SpaceX did $1 in sales, you were paying $100 for that. The valuation is absurd based on financial history. Again, my opinion, right? Our opinion. But let's look at the data. And so what we also did in our report that you'll see is we decided to ask Grok, which is the AI component of SpaceX that is consuming this insatiable demand for cash. Say, hey, Grok, how many times in American history has a company that's been trading at 100x revenues and with a market cap over $1 billion been a profitable investment a year later? We then had Grok produce a table with all of those names. You know how many names Grok found? SpaceX's AI agent couldn't find one, meaning that this valuation has no precedent of working out. Could it in the future? Maybe. I'm not betting on it with my money. Again, investing is about probability. Why were they so concerned about pushing this at 100 times revenue if they could have just sold a little more stock? The story gets even more puzzling. For decades, the rules have been in place. If you're going to do an IPO, you have to let a cooling off period mature before that would be included in an index. The NASDAQ has adhered to that. The Russell indices had adhered to that. Over 1.1 trillion, that's trillion with a T, over $1.1 trillion of investor money are earmarked to this NASDAQ 100 index. The NASDAQ 100 index is a list of 100 companies the NASDAQ exchange chooses to essentially represent the broader NASDAQ market. And many people think of it as tech. NASDAQ chooses which names are going to go into that index. And then you have companies like Vanguard and Fidelity that you all invest with, who have their own ETFs, stocks that trade in an effort to mirror the performance of those 100 NASDAQ names. So rather than you as an individual going out and saying, I want to buy a portfolio of 100 different NASDAQ names and weight them differently, you would buy one share of this NASDAQ 100 ETF. Well, it does seem reasonable that for years and years, these indices said, we're not going to put an IPO in the index, not only on the exchange, right? NASDAQ already broke its own rule. Of course, they officially changed the rule just to let SpaceX onto the exchange. But now, coincidentally, we see these indices changing their rules so that SpaceX can get into the index. And SpaceX may deserve a place. Surely it does. But if SpaceX is such a great deal for investors, why do we have to force these indices to change their rules so that SpaceX can be included in a faster time period? Why couldn't Musk and SpaceX just wait a few weeks like every other company in the history of the American markets done? What is so desperate about SpaceX's needs that they had to have the cash buying of the indices right away? And a little asterisk, we don't have time to go into all of this. But the Russell Index even went so far, for some peculiar reason, is to say, we're going to hurry up and we're going to force investors through these indices to buy SpaceX stock within 5 trading days. So what happens is NASDAQ now includes SpaceX in the index. And because they're officially included, the indices are supposed to mirror that listing. And the indices, like the Russell, are not only agreeing to include them faster, the Russell Index is including this within 5 days. What's the significance of that? Well, see if this seems like a conflict of interest to you. The underwriters, the people who took SpaceX public, Goldman Sachs, Morgan Stanley, JP Morgan, who made, what do you think? Think they did that out of the charity of their hearts? They stand to make a lot of money, right? So their job after the IPO was priced last week was to, what they say, stabilize the price. So it is allowable for these market makers to buy the stock to support the stock at levels where otherwise it wouldn't go. So it's a temporary artificial boost to SpaceX's stock that these underwriters are potentially bringing into the market. So let's think about this for a minute. All right, SpaceX shouldn't have usually wouldn't have historically met NASDAQ's criteria to get on the market, but they changed the rules to. They shouldn't have been included in an index as quickly as they have, but they've made that change. And they've made the change so quickly that some indices are going to be buying at the same time the market makers are artificially propping it up. So who are the people buying the SpaceX stock through these indices? Who are the people represented by the $1.1 trillion that are tied to these indices? Think about all of America's hardworking class who have retirement plans, 401ks, IRAs. They're the ones who are essentially being forced into buying this because the index they no longer have a choice to exclude. They are being included with these rules changes. Interestingly, also, just to let you know, the government issued a report trying to give indemnity, trying to waive liability to the ETFs that include SpaceX. Why do they need to do that, right? Like, guys, why do we need to do all these things? If SpaceX is a great deal, people are going to be lined up to buy it. You may say, well, they have been. True, it was oversubscribed, but how well was this managed with such a small float? SpaceX needs to come up with $20 billion in the next 6 months. That's a significant part of what they raised already, not to mention their plan. So what is SpaceX? The core part of SpaceX, the attractive part, is the Starlink business that you've read about, right? It allows you to have mobile internet and all over the world. Very attractive business. However, even the underwriters are admitting even this one core engine of SpaceX has trouble. As they are pushing out into global expansion, the subscription prices are falling. People are not paying as much for it overseas as they did here in the US. Definitely a red flag for the business. Can they overcome it? Perhaps. Hopefully for them, they can. But remember, this is the attractive part of the business model. They also have this rocket business. Maybe it'll be great, but it is losing money. They have X, the social media platform. Even the biggest bulls on SpaceX will admit some of the X resubscription numbers are disappointing. Disappointing. And then, of course, we have their AI business that is voraciously consuming massive amounts of debt. And I want to submit to you my opinion, an idea. What was COVID really about? You may say, why are we talking about this? People. What Satan did to Eve in the Garden of Eden was him revealing his game plan. I submit to you, COVID reveals evil's game plan. COVID began with this perception that this immune issue that had been around for 25 years, that the immunologist told us was nothing big, not a big deal. COVID began with this hype telling you you needed to protect yourself or you're going to die. And then remember all the peculiar behavior? The people who were most vulnerable to COVID, the elderly with respiratory sensitivity, they were the ones who were forced into confinement with other sick people. The American Medical Association said right away, this is a recipe for death. What's going on here? It doesn't make any sense. And then they would be put on ventilators with remdesivir, a death trap. What's going on here? Why are we doing this? And then remember, the hospitals were paid more if they would label a death COVID. A person could have been hit by a car. They gave them an incentive to label it death by COVID. And literally crazy results like that happen. What was all this hysteria around this COVID panic? Well, the reality is, if you weren't panic-stricken about COVID, if you didn't understand that COVID was just the 25th episode of coronaviruses playing out, there was nothing for healthy people to worry about, you could have gotten all scared and concerned. And then you started looking, well, if it's so dangerous, what do I do? To the people who were so scared about this corona deception, they thought, we need the drug. We need what they called the immunization. It wasn't, but you were told you needed it. Why did you need it? Well, let's just stop for today at the money trail. I think people see that now much more clearly, that they were deceived. So what is AI about? Let's think about that for a minute. What is AI about? It's so I can go online and I can get a new recipe, or I can get my workout routine, or, what is it? It's what we could have done on the internet with a little more work before. And I submit to you, just as COVID-19 was simply an echo of past coronaviruses, AI is not new. They've been working on AI for decades. They've just thrown so much money at it that these large language models have become so much quicker and better at giving you an answer. So why do we need to build this out? Oh, a national defense concern. Really? Really? Let's think about China for 1 second in this light. China trying to steal all our steel factories? You bet. Anything that we can make, China wants to make. They subsidize steel. They'll do anything to rip industry out of America. Why? Because they know manufacturing is so important to America. But what is China doing about AI? You know they have a much larger population than we do in America, and you know they're much more technologically proficient. That's why China has so many more data centers than we do, right? No. By many metrics, by many estimates, we have 10 times as many data centers as China. China is happy to have America build out the AI so that they can come in, use the data. Because what happens? To have these AI data centers, as Aaron Brockovich has really well documented, you are desperately consuming two of America's most important resources, our water and our energy. So think for a minute. If you were our enemy and two of our greatest resources were water and energy, you think we could ever come up with a way to get America to blow through those resources on their own, making them much more dependent on others and much more vulnerable? Yeah, you're right. I hope Iran works out great. I hope we get all the oil we'll ever need out of Venezuela. But I don't like that idea that we are giving up so much for what? It's like COVID. So could it be that we are being forced to think SpaceX, AI is so critical to the future so that we will allow these investments, we will go along with them? Food for thought. Let's pray for wisdom. One of our jobs isn't to say what has to be. We can't promise you anything, right? Gold may not go up. We're looking at the probabilities. SpaceX may be the first 100x revenue company that's done fabulously for its investors. Our job is to really get you to stop and think, what am I being as an investor? What am I being told to think versus what is reasonable? What is a reasonable way to position my portfolio to protect my family in light of what's going on out there? Our opinion, our expectation is that we're going to see SpaceX trade a whole lot lower. Maybe it goes higher for a while. Who knows how long, right? It's like we talked about with investors with Bitcoin. Bitcoin, the miners of Bitcoin, who we know from our clientele, saying that Bitcoin is failing every use case. By the time we thought, how high can Bitcoin go? Today, how high can SpaceX go? It can go higher, but we don't know how high. I submit to you, when Corvus came public in 2000, gold was trading at $280 an ounce. It was buried in the back of the papers. That was what you wanted to buy. The high-tech names. The names that Goldman Sachs technology department said were strong buys in the dot-com era, they were the best short sale candidates you could have hoped to find. Maybe that'll play out again here. Our submission to you, you want gold at this time when 100x revenues are being pushed on you with such blatant disregard. Where do we go from here? 2 steps. One, can you click on that link there and get a download to our report? Praise be Jesus. And we hope will open eyes. Also, click on that link and schedule a one-on-one consultation with our team. When you drill into this report, we think you're going to have such a new awareness of why you want gold and why it makes so much sense to have some. You'll have questions that our team will be happy to answer with you one-on-one. We would love to have you reach out to us. And in closing, we want to share with you something that we're doing. Again, our charity is to bring Jesus into America, whereas most companies have, we couldn't find one company in the S&P 500, the charity like ours, to Christianize America. We are now just weeks away from this wonderful 250th anniversary of this country. Make no mistake, we love America. We are rooting for everything good for America. What can we do for America? What can we really do? I'm so pleased that what our team is doing is that every day for the 30 days leading up to July 4th, we are praying and we are incrementally fasting, asking heaven for one gift, that if any of those beloved patriots who died so that you and your family could live in freedom, if any of those patriots or any of their loved ones are in need of God's mercy, those who have died, that God will bestow his mercy upon them and bring them to paradise with him. We think it is the greatest gift that we can give those who have gone before us and died for our country. We invite you, join us going into July 4th. We are having, as practitioners in the Catholic Church, masses offered for this intention. Again, we are praying every day with our clients and as a team for this grace, and we are fasting incrementally each week. We'd love to have you join us. We broadcast our prayer time together every day, and we'd be blessed, and our prayers would be empowered with your participation. If there are any questions that the studio would like to present, we're happy to answer those. We are over, so if it's time to break, we understand. No matter what, thank you so much for joining us. God bless, and God bless America.
We do have a couple of questions from the audience here today. So the first is a quick one. Is the report free or does it cost anything?
The report is free. We ask you to give us your contact information. We give it to you free, but we would like to know who is seeing this. So that's all that's required of you.
Next question is, what was the second financial pillar? From the very beginning, there were three financial pillars.
Okay, so we were talking about the case for gold. And we said, like a stool, we believe there are three legs to this stool, which is, I think, what the question is referring to, the three legs on the stool of gold. The first was the laws of finance, which talk about when a currency has too much debt, you're going to see the value of that currency erode, and the value of gold in that currency historically has risen. The second leg of the stool was financial history that looks at this financial theory and says, guess what? It holds up. And in our report, we show the 500 case studies and delve into that. And then the third leg was scripture that uniquely speaks about gold. And by the way, we never got to the third part in scripture. We talked about Garden of Eden and Haggai. But if you're not aware of this, America, in Revelation, God explicitly says, I counsel you to buy gold from me refined in the fire so that you will grow wealthy. That is the only asset Scripture specifically counsels us to buy so that we will grow wealthy. So the scriptures were the third leg of the investment stool for gold.
And we had one more question. One of the members in the audience said, my financial advisor doesn't understand why I'm interested in including gold in my portfolio. What would you suggest I say back in the conversation?
I would submit to you, again, there are many financial advisors who are good people. That statement is so ignorant. I really think many Americans are going to conclude the advice you've received has been negligent. That would be like a doctor saying to you, why would you want to exercise? Just sit on the sofa, eat ice cream, every fat food you can find. Just do it. Why would you want to do anything else? You say that's an absurd comparison. No, it's not. No, it's not. The job of the advisor is to know history, is to look through the data. The advisors, this is why we are saying the advisory industry has failed. It has failed America. We are underscoring with this report, there is no gray area about it. There is no way a competent advisor can say to you, why do you want to do this? I don't understand it. It's the only currency that's succeeded. It gives diversification from the financial system. It gives diversification from stocks, from bonds, from financial assets. An advisor who says that is like the doctor who says, why would you ever want to exercise? Why would you ever want to eat well? I would say just pray for him, and you probably really want a new advisor. They're not going to concede anything. The way advisors work is, again, there's an evil component to this. They never admit, yeah, sorry, I was wrong. You should have taken so much of your money at the peak in 99 when advisors told Americans hold nothing but tech stocks and other equities. They wouldn't let Americans talk about gold at the peak of the dot-com bubble, just like they're not talking about gold now here where we may be at the peak of the AI bubble. You got to just know. You got to make the decision. You got to understand how to think critically yourself, and then you got to do it. You got to step up, buy it, take it out, just say to your advisor, thank you. I don't know if you want to close your account entirely with that kind of feedback from them, but just say, I want my money. It's my money. If you don't understand it, you got some learning to do, because they are not going to understand in a quick conversation if they are that ignorant about the importance of gold as a professional today.
That one final question we had was, how does somebody join the prayer time with St. Joseph Partners? And our team is putting the links in the chat, but it's also on our website and our YouTube channel.
Thank you. Thank you, everyone. Again, God bless. Let's have a wonderful rest of June as we head into this fabulous 250th celebration of the United States of America, the greatest nation ever formed. God bless, and God bless America.